Mr. X here. I'm going to be doing an end of week breakdown for June 1st through June 5th, 2026. Today is June 8th, 2026. I'm going to go through GU, EU, and see what trades came up and how they were managed, and see how GU and EU work together. So we'll get started on the monthly on GU. You can see structure is bearish. We do have some IRL left to target if order flow wants to stay with demand and control. But it could also go down at any point. It does not have to fulfill that because we are in a yearly zone right there. It's not the cleanest, but it's still there. And this is where we can look at the euro to make more sense of it. The euro is in a yearly zone. Much easier to see a yearly flip zone broke that low. And it's cleared all the IRL below this somewhat of a chain here. So we are expecting this to continue down because structure is bearish. So that's the monthly. And another thing, monthly, we're looking for one side to break. We're not really looking for an inside bar. So you can see the past, well, inside bar right there. Then we broke the low, continued down, tracked up for the whole month, continued higher. This one, we took the high and sold off. Here, still a little too early to tell, but we might be tracking towards this low. That's GU, EU. Really the same thing, but we're really close to this low, so it looks like we're going to fulfill that. Weekly, sitting on an inside bar. Last week was a bullish bar to mitigate as a pullback. This is GU. So we're looking at the weekly here. We have weekly bearish structure. So the only thing we can expect here is this move right there. It's a strong high. We wicked this high. We have a supply chain coming up here. So we're looking at this as a CPB and price just to bounce off of it. And so far it mitigated here and we're continuing lower. This monthly is not a chain, just a kind of a flip zone here where we came down, came up, reacted, came down, just wicked the low. Then again, it wasn't a strong zone because we just wicked the high. It's more of a neutral zone. We'll see what happens. Follow the weekly for more guidance. EU, a little different story because this break right here, so that's a strong low, weak high. So just purely based on weekly, if we're ignoring this monthly, we would think that that's going to be our structure right here. But as it stands right now, we're looking like this could hold, and we're creating this chain here to go bearish. Nothing's really showing strength down here. So that's the weekly. Daily on GU, not extremely helpful, but we do have a zone that mitigated the weekly and that broke the last point of demand. So this is an area that we just don't want to assume will break. We're better off assuming this is going to hold and produce that low. It's not really helpful to trade from. It's not a zone or an area of interest, but we know we don't really want to long within here and hope we're going to get a good trade. So all longs become more risky. Other than that, the daily is not helpful. It's just a range. On EU, the daily, same thing, not really helpful. Mitigate there, break the last point of demand. And we're just tracking down. Looks like we're going to take out that and continue on going lower. The 4 hours where it gets more interesting. This is all last week, but coming into the week, on market open for the week was right around here. And at this point, we had filled this void. We got the floor. We have demand and control on the 4 hour. And we have some potential targets. We're taking IRL here, here. And we got one piece left here. But it doesn't have to take this. You have to remember we're in this giant daily supply that mitigated the weekly. So as we track down weekly, daily, and then 4 hour, the 4 hour is going to create this pullback into the daily. We're not calling this a week high because we don't have a daily floor after. We only have a 4 hour floor, and there's a daily high. So we're going to stick with that and see how that plays out. Then we look, most of the week was very rangy. We have this high failing to take out that low with the wick break. And we have this low failing to take this high. It stops out up here. And again, fails to take out the low. We go down. Then we come back up, fail to take the high. So it's very just rangy price action. And that indicates that the 15-minute is going to help us a lot more. On EU, you can see it was much more helpful. We get the weekly mitigation. So it's a daily strong high. We get this daily last point break. So we're not trying to target this really ever. And the 4 hour sets up really nicely. We come down, we flip, we break. And we could start anticipating that this is going to hold on Tuesday to continue taking some IRL here and eventually take this low. There weren't any trades on Monday, so we'll pick up on Tuesday here on EU. The easiest trades in the world are 4 hour mitigations and a POI being formed from there. So here's the 4 hour flip zone. We mitigate pretty much right at market open, New York open. And we have this strong impulse down here. Get the structure break, sets up this extreme POI. So we don't have demand, or we do have demand in control. So we're going to look for a double confirmation rate in there. And before we go there, I want to mention, like, what are we going to target? And seeing that nothing's really confirmed, we're hoping this is going to confirm. We do have weekly and daily. We're looking for bearish price action. So we can be more aggressive at a zone like this, anticipating this to become the floor and to make this break. And from there, tracking down, we're anticipating that this 15-minute price action is going to fulfill that. We mitigate, we take some IRL, take this extra piece over here. And so once we're up here, we could start anticipating, okay, it looks like we're going to be taking out more IRL. They're not confirmed targets yet, but based on everything else, it's a really good trading opportunity. And so seeing that we don't have confirmed targets yet, we get the tap in, we get this flip and break right here. And we're looking for a floor on the 1 minute and liquidity. So this is You can see nothing, there's no pullback, there's no structure being made. So the only liquidity is up here because that broke this structure. There's no structure here, there's nothing. These all these candles traded lower. This had a small pivot, but it just wicked the low, so that's not structure. So it's not liquidity. We finally get this pullback in here with this break. So that's our first potential liquidity, along with this and the high. So now we're just being patient. We're waiting for something to happen. So sweep to happen. We get the sweep. And once that sweep happens, we need to confirm it, either with a flip model. So something like, let's say there's our demand zone. Price were to flip off of it like that, and we would take this trade here. But it didn't do that, so now we're waiting for it to confirm this being a liquidity POI with a structure break, which is right here. And in these cases, I like to just, we have plenty to target. We're targeting 15-minute IRL, so just get in the trade after this confirms, because we don't know if it's going to come back up. Are you really going to try to execute there? You're going to execute here, and that's pretty much where I executed. And if you wait for the liquidity POI, it just doesn't happen. Okay, that's a good trade, 3R. You see it played out all the way to the low, but it doesn't have to. Like, it could take all this IRL here, which you see it did, and it could pull back and fill this void, which you'll see later. That's what it did on NFP Friday. So it's best just to take the profits and just look for the next trade. So that was Tuesday. Now here's one of the convergences on GU, and this is where EU really helps set the direction of the day, because we're anticipating this to hold. We're on GU. Could get crossed up thinking we're going long because this high failed to break this low, and we're just going up. Nothing indicates that we're going to go short, except EU indicated it. This was at the same time we got the EU break. So this was a higher risk trade based on that information. We did fill the void here in, it's like late Asia. So there's no confirmed really good targets. We filled this void again in here. And the only thing maybe you could target is this high and really stretch to that high. But again, we're in daily supply, we're in 4-hour supply, and EU's looking bearish. So at this point, maybe just lay off, don't really go for it. Everything's stacking against this to work out. So that was Tuesday. So coming into Wednesday, got New York session starting right around here. And see, we're starting to take liquidity. We're taking all this liquidity. And eventually, now we're looking like, okay, this low didn't break this high. So now we're possibly going towards this low. So coming into New York, trading from a chain like this, or what my preference was this pullback to this flip zone and then trade towards the low. But neither of those happened. Well, trade from this chain. There was a setup in here, and then this CPB and break produced this flip zone in here, which got swept and set up another trade. Again, we're just targeting IRL. We're going for 3 hours. IRL, possibly low. And this was Wednesday. So to break this down on the 1 minute here, we got this 15-minute chain, we tap into it. So we're just looking for liquidity to be taken and an entry model. So we take that, no liquidity is taken, it's pretty much straight down structure. And on the way up, we're waiting for liquidity. We're taking all this liquidity to the left, but not doing anything. That's liquidity. This is not liquidity. There's no pivot. But here, we just come down and we trade higher. We trade higher again. So the first real liquidity is when this high is formed, creating this structure, and then we break that down here. So at that point, we have a few different options for liquidity. We have this piece, because we have this little pivot, and then we have the high. The price comes right up, sweeps it, comes down. So we have these last points of demand. We flip off of it right there. And once it breaks, get in. These orders pushed, it reacted off these, so it absorbed those orders and came up and proved that those orders are not very large compared to the selling orders. So get in, execute somewhere down here, or you can wait longer for this other flip. But I generally am not trying to wait for the perfect pullback. Like I don't want to wait for this to happen and the price to come up here. So get in here or more confirmation down here. Again. And then moving further along, we had this flip zone. This was deeper into New York session. And looking for trades for the flip zone mitigation. This is just one wick, one 15-minute wick. So the zone doesn't exist yet. The zone didn't become a zone until the candle closed down here. So this candle closed the 15-minute, and so we have some distance here. We wicked down a little bit, came back up. So now after this point, we could say we're mitigating the zone. We get the first mitigation, no liquidity. Second mitigation, no liquidity. Still looking for liquidity. We get our first opportunity here, but price just trades right through that. And now we swept the whole 15-minute zone, the whole flip zone. And from there, this is the entry. So after a 15-minute flip, we're just looking for a 1 minute. After a 15-minute liquidity take, we're looking for a 1 minute reaction and break, a flip zone. We're not going to trade directly off this liquidity like this because of the higher time frame liquidity. This one doesn't give a flip zone, so we wait, and this 1 minute broke this structure, so that's now becomes our new liquidity. That gets taken, and then we flip off this wick right here. Gonna break at a second reaction, so that's the entry. Stretch out the buffer. Would have been really tough to stay in this one 4 to 7.5. That's an extreme stretch. Nothing's indicating that it's going to keep going higher. We've already taken 15-minute liquidity and more 1 minute liquidity. So that's another option here. If you stretch out your stop loss too much, let's say you went 9, then you're looking at a break even because this only went 2.3. It has to be pretty close to get that 3R. That was Wednesday. Now we can look at EU. Like I said, on GU, we have targets. We have IRL. We have an expected load that we want to be taken out. But on EU, on this day, there wasn't anything to target. So this was Wednesday during London session, we took out everything plus the low. So that's our 15-minute targets, our 4-hour leg. So at any point, we know we could come back up to a 4-hour zone, which is exactly what happens on Thursday. So there's no trading here for me. There's no targets. And you can see just move to a different pair. GU had great trades. Why put out that extra risk when price could just come back up here on this day? So then we're moving on to Thursday. Thursday had some great trades. Again, same thing. We're still looking for this overall daily low, daily leg to be formed. So again, just 4-hour zone to trade from. A little less strict with 4-hour zones. They're more areas, so they don't have to be like a flip or a chain, just an area. We need our POIs on a 15-minute to be those. And so we tap into the 4-hour here. We get our first break, last point of demand before the mitigation. We get our floor. We get our second break pretty quickly. So everything's looking good. The only thing I didn't like about this trade was that it was now a daily outside bar. So you can see this is the previous day low we broke at Tokyo Open, and then previous day high was here. So we broke that during London. So that was one cause of concern. But when I interplay GU into this, GU took the low of the day and wasn't going to break the high. So we have that's the previous day high. So it's staying in there. So that's one indication on why shorts could work today. So on GU, yeah, we'll just stick to GU right now. Tap in here, last point, reaction, break reaction, get this flip zone. As of this point, nothing's confirmed yet. We don't have any targets. We could say IRL is starting to be taken with this flip. And so we're anticipating taking more once supply takes control. But we don't want to wait for that because break 4-hour price action, daily low, previous day low was taken. So we could get in with more confirmation on the 1 minute. So that's our zone we want to confirm. We get the tap in here, come down, get our structure break, which sets up our liquidity right here. We sweep it, we flip and break. So now we have liquidity taken and a floor. So we have everything we need to make this trade. So at this point, you can wait for it to come back up. You can execute right at that break, because this is the break that locks in the floor. Maybe something like that. And that's the first trade, just 3R. Coming down again, we have another flip zone made from this little wick right here. This is all efficient pricing, so we're just looking for, we could really do anything we want down here. Just get that reaction, plus this little tiny pivot here to get that break. So now we could say that this flip zone did break. So we're looking at this new flip zone that was formed. And same thing, we need liquidity and an entry model. We get first tap in here, don't create any structure, we come back up, not liquidity. So now we're just waiting for some kind of structure break. We get it right in here. A few different options. Definitely the high. This high breaks this structure here. This high breaks this structure. So if price comes back up, we could trade that. Or sweeps the whole thing, we could trade that. But price doesn't want to do that. We get some more structures made in here. So we're just looking for one sweep and one entry model after that. So we get the sweep right here. We get the reaction, break of reaction point right there. And just by this little pivot in here, you could say this broke something and just get in right there. And give it some kind of buffer. That would be strict 1.2 pips. So we could stretch out to 3.5, because there's still a lot to target on the downside. And at this time on EU, that was Thursday. EU is doing the same thing. We had already reacted here and broke, so we're taking IRL, that takes some more IRL and eventually the slow, and further on. So once we create this flip zone here, we get the reaction, we break it. Trading from this flip zone is great. It's already pro order flow. We're just going to look for liquidity and entry model. Tap in right here, create some liquidity here, create some more here. So as we take these liquidities, we're looking for what happens after. So we take this liquidity here, we come down, we trade higher. So clearly, what we're looking for with liquidity is to take the liquidity, use that liquidity to fuel a move down. So when it trades higher, we can tell that it wants more liquidity. So then we get this break here, creates a new structure, get that sweep, reaction, break. So at this point, just get in anywhere in this area. Coming out of the 4-hour zone here, get this quick floor. And it is a flip zone. Well, we have this extreme zone that breaks the last point of demand. We come back up and mitigate, and we're coming down. So this isn't the best POI to trade from. It's an extension of this extreme zone. It's not a flip. It's not a liquidity POI. So those we want to be a little bit more careful with. It's not a chain yet. This is a great zone because that's a chain and a flip. So the opportunity here is much more risky. And probably want to look for a little bit more confirmation if that happens. This ends up being a double confirmation, which is pretty good. But yeah, I like to stick with named zones. That's my preference. I don't think there was a trade out of that high zone. Now see, no liquidity right there, but then we trade up and it just sells straight off. Not the best opportunity at the top, but taking this one much better. So that is the full week on EU and GU. NFP is on Friday, so this range, not expected, but want to take quicker profits because if NFP is going to make this large move, then we need liquidity for it. So that's building liquidity. We can see what happens on NFP day. Just builds more liquidity. Takes all the internal range liquidity, does not break the high. This high holds. Just like I was saying with the weekly and the daily, weekly mitigations, daily big zone somewhere here. We're not ever looking for just further price action. And same with this. Yeah, this high didn't break any lows down here. We get order flow, but this was the mitigation of the 4-hour. It was a much stronger zone. So we do fill the void, and that's pretty much all we really want to do in those situations because it's counter trend. And this sells off. GU ends up sweeping all the liquidity from this mitigation. And this would be the 4-hour floor. So we got, yeah, that's in there. We get the first break here. We range for several days, and then we get the floor and the breakdown. So I'm going to call it here. This was a good week for trading. And you just see how many opportunities there are just to take 3R. All right.